But then, what are the green shoots? Are there any green shoots at all? Is there a hope? Is the economy going to improve? And by when? Have all been very pertinent questions asked. I want to highlight, if anything, just 7 of those important indicators which show that there are green shoots in the economy. And therefore, I would draw the attention of the House for every such debate that we do, that the 7 indicative green shoots are very important for us to take into cognizance. The first thing is the global sentiment is in favor of India. Foreign investors continue to show confidence in India, and that is why the country has attracted a net FDI of $24.4 billion in April to November of 2019-20, when all of us have started wondering if there are ways in which we can identify if there are any green shoots. Even between October and April and November of 2019-20, $24.4 billion as compared to $21.2 billion the same period, April to November the previous year, which is 2018-19. The net FPI in April to November 2019-20 was positive at $12.6 billion as against 8.7 only, 8.7 in April-November 2018-19. That is the first indicator, sir. And the second, the announcement of the National Infrastructure Pipeline may further increase the flow of FDI into the country, even for brownfield projects. And therefore, the green shoot is got to be identified, recognized, and its impact all of us can wait to see. So the next one, the third indicator of green shoots, industrial activity is on a rebound. The IIP number in November 2019 has registered a growth, a positive 1.8% as compared to the contraction it suffered of 3.4% in October 19 and 4.3% in September 19. Between September, October, and compare it to November, November itself is showing positive indicator. That's a third indicator, sir. I'm quickly moving over to the fourth. I wish members do pay a bit more of attention, sir. The first one was the global sentiment. Second, based on which the FDI flows have come. The second, sir, is the net FPI, portfolio investments. That's the second, sir. And the third, therefore, is industrial activity as represented or indicated by the IIP November 2000 number. Now, November 2019 number. So the fourth, PMI manufacturing, which is the Purchase Managers Index, that is steadily improving, increasing from 51.2 in November 2019 to 52.7 and 55.3 between December and January. So November was 51.2, December was 52.7, and January was 55.3, and therefore there's a steady climb on the PMI also. So if that's the fourth, the fifth, forex reserves, foreign exchange reserves, have built up from $413 billion by end of March 2019 to $466.69 billion as of 24th January 2020, reflecting an increasing confidence of overseas investors in the Indian economy. That's the fifth. Sixth indicator, sir, the gross GST revenue collection, about which all of us do have a lot of concern, but I'd like to assure the House the numbers that I will read now will give you the confidence that GST collection is steadily but only improving. GST gross revenue collected for the month of January 2020, sir, is 1,10,828 crores. During April 2019 and January 2020, the gross GST revenue collected has surpassed 1 lakh crore 6 times, pointing towards an increased economic activity overall. The gross GST revenue collected in the month of January 2020 grew at 12%, collected in December 19. So if I were to go from the earliest month, November 2019 was 6% more than the corresponding month of the previous year. December, 9% more than the corresponding month the previous year. January 2020 compared to January 2019 has grown 12%. So there is a steady growth compared each month to the previous year, and therefore the negative growth rate which it showed only in September and October has been corrected. We are on a positive growth trajectory. And this will obviously bring in greater newer investments to the economy because the performance of the and it will also reduce the business costs. So that's the sixth green shoot I would like to highlight. Green shoot 7, sir. Reinstating the positive confidence in the Indian economy, the secondary markets continue to be upbeat, and the BSE Sensex increased by 5.6% up to 31st January 2019 over the end of March 2019. So 7 green shoots based on which the economy now very clearly is moving forward with also very clear steps that the government has taken. So most often when we talk about the economy, we constantly and rightly refer to the 4 growth engines. 4 growth engines, and sometimes it's alleged that 3 are not working, the government and the economy is moving on the strength of just 1 engine. The 4 growth engines, sir, just for our information, are private consumption, private investment, public investment, and exports. These are 4 engines which we constantly keep referring to see if the economy is doing well or not. Now, I'd like to tell you about the measures that we've taken so that, given these green shoots and the measures that we're taking, that the economy is moving forward and the government is constantly in touch with the industry, with MSMEs, with stakeholders of all kinds, so that the steps that we take actually trigger all the 4 engines towards better prospects and better speed of growth. Sir, on investment, I'd like to mention 13 specific steps that the government has taken. And because of these steps, and also because of the green shoots, I will give you very clearly that the government is constantly engaged with sectors and also taking appropriate steps. The first one, sir, in December 2019, the Cabinet approved the Insolvency and the Bankruptcy Code's Second Amendment Bill, and the amendment helped in fast-tracking the insolvency resolution process. And therefore, with greater ease of doing business, people are able to perform. Now, I would just like to give you one data related to the IBC, the Insolvency Bankruptcy Code. Sir, as of 30th November 2019, 13,210 cases have been disposed of by the IBC. Around 190 cases, 190 cases, involving claims of around 3.67 lakhs of crores has been sorted out. Claims were 3.67 lakh crores. These cases were resolved, and a realizable amount of around 1.57 lakh crores has been realized. So the IBC and its potency and the way in which it's helping to sort out industries which are in distress. I would also like to point out, sir, 11,366 cases involving claims of around 4.74 lakh crores were disposed prior even to admission. So much before it got admitted, because IBC process is so open, people knew how it was going to work. A lot of them have settled for prior to admission itself, settling the cases. The realizable amount, which is important, the realizable amount with respect to 4.74 lakh crores is not available, but even if we make a conservative estimate, it will be around 2 lakh crores. So in other words, out of claims of around 8.4 lakh crores, the realizable amount is around 3.57 lakh crores, which is around 43%. That's the kind of realization that the IBC is promoting. In 780 cases, which were for liquidation order, which has been passed involving around 4.52 lakh crores, liquidation value against claim is barely 6.65%. Actual details, sir. You also mentioned the I'd like to give as many facts as you want. 3 hours now notwithstanding. There's a lot of work being done by the government, and I shall utilize my time, sir. I would like you to have the indulgence of listening to the work which this government is doing. Yes. So in 780 cases of liquidation order has been passed involving around 4.52 lakh crores. Liquidation value against claim is barely 6.65. Out of these 780 liquidation cases, 547, that is over 70%, were earlier with Board of Industrial and Financial Reconstruction, BAFR cases, and or probably even were defunct. Out of the 780 liquidation cases, 37 cases involving claims of around 8,793 crores were finally dissolved, having liquidation value of 23.06 crores with recovered value of 22.32 crores. And therefore, it is important to realize that IBC process has only expedited and sorted out matters where BIFR sat over for several years, and we've corrected that process. So if that was on the IBC, sir, I said 13 specific points where we are showing what we are doing as regards boosting investment. The second one, sir, is the National Infrastructure Pipeline, which was announced on 31st December for each year from 2019 to 2019-20 to 24-25. A task force has been formed, and they have listed out all the companies and projects with which we are going to move forward. 103 lakh crores worth of projects have been announced. So I move to the third point, which is which each one of these 13 are specific measures that we've taken. Third one is a new provision was inserted into the Income Tax Act so that the corporate tax rate which companies pay will be for domestic companies reduced from that high rate at which it was to 22%, subject to condition that they will not avail any exemptions. So rate reduction in corporate rate. And in point 3 itself, second part is in order to promote Make in India, we reduced for new companies which were coming in, new domestic companies which were coming in from 1st October 2019, the rate has been brought down to 15%. And also, as a process of simplification and making it easier for people who want to comply, the minimum alternative tax has been removed in all these cases. So we are making sure that the benefit of reduced taxation will reach companies, and also making sure the process of simplifying the reform step, which is towards simplification of the taxation process and the framework, are being simultaneously handled. Not only reduction, but also removal of MAT goes in that direction. So the fourth of the 13 points related to steps to improve investment. Budget 2019-20 announced an infusion of 70,000 crores into public sector banks to boost credit and investment in the economy. As of November 2019, 60,314 crores have been infused from this provision which we made in the July 2019 budget, and banks are better equipped towards funding for growth and investment. So, fifth point of the 13, strong banks are now the imperative to achieve the $5 trillion economy that we want to build. Along with numerous governance reforms, government has proposed an amalgamation of 10 public sector banks into 4, and with a view to create next generation banks with strong national presence and a global reach. Operational efficiency also are being worked up. Efficiency gains arising due to this consolidation are expected to reduce the cost of lending. So, one other aspect of point 5 is that RBI's Monetary Policy Committee has changed its stance from calibrated tightening to neutral in February 2019 and to accommodative from June 2019 onwards. Accordingly, the policy rate has been reduced by 135 BPS since February 2019. However, I am glad to say that in the recent announcement, the RBI not just looked at monetary policy as an instrument, because monetary policy has its own limitations. The marginal or the incremental benefit now we are getting globally. Globally, that is the impact. Marginal or the incremental benefit that we're getting out of monetary policy is now plateauing, and therefore our central bank, much to their credit, I like to recognize this fact, has come out with very creative solutions so that the economy is driven towards growth, not just observing inflation but also enabling growth. And for that, the 4 things that the Reserve Bank of India did a couple of days ago are of great importance. The cash reserve ratio, sir, which is a requirement on deposits used for lending to auto and housing sectors, are waived so as to bring down the cost of credit. This is a step which Reserve Bank of India has taken, aiming at pushing the economy towards greater growth. Second step they took is one-time restructuring of loans to MSMEs and allowing construction sector a 1-year time to start operations after receiving the loan. Again, a positive step towards pushing the economy further towards better, speedier growth. Third, sir, long-term repo rates up to 1 trillion, which is 1 lakh crore, in 1 to 3 year window to be introduced so that banks can avail of it from the RBI itself to ensure adequacy of funds to banks in the medium term. So I'd like to elaborate on this point a bit. Most often, we have a problem, and we really are facing a situation where there is a lot of liquidity available in the country with the banks, in the economy. But that liquidity doesn't seem to flow further to reach those people who want the credit. As a result, we were confounded with this issue of there is liquidity, but actually it's not reaching people who want it. Therefore, this step which is being taken by the Reserve Bank, for whatever compulsions that the banks do not want to give the liquidity further, they have now made a provision so that at policy rate, which is far lesser than the repo, at policy rate, the banks can even borrow from the Reserve Bank and lend further at an affordable rate. It's a very creative step, and I'm really glad that the liquidity movement, not waiting for the banks to reset their books, will now be further enabled. And finally, the repo rate remains unchanged at 5.15%. So with the RBI also, along with the government taking steps towards promoting growth, I'm sure the green shoots and this together will help our economy to move further. So in order to enable housing and infrastructure projects, the government has proposed to establish an organization, Credit Enhancement for Infrastructure and Housing Projects. So we have now come up with a further benchmarking, which the Reserve Bank has also enabled, so that banks will have to price their interest rates accordingly so that they can move towards better funding of government, MSME and other projects. So then, The eighth point, with a view of boosting the realty sector, the real estate sector, incentivizing consumers to buy houses, the government has taken some notable measures. Government steps for helping people to have their purchases of houses enabled.